What is reconciliation? Reconciliation is an accounting process that compares two sets of records to check that figures are correct and in agreement. Account reconciliation also confirms that accounts in the general ledger are consistent, accurate, and complete. Account reconciliation is particularly useful for explaining the difference between two financial records or account balances. Some differences may be acceptable because of the timing of payments and deposits. Unexplained or mysterious discrepancies, however, may warn of fraud or cooking the books. Businesses and individuals may reconcile their records daily, monthly, or annually. A major reconciliation tool is double entry accounting. There is no standard way to perform an account reconciliation. However, generally accepted accounting principles (GAAP) require double entry accounting, where a transaction is entered into the general ledger in two places and is the most prevalent tool for reconciliation. Double entry accounting is a useful way of reconciling accounts that helps to catch errors on either side of the entry. Another way of performing a reconciliation is via the account conversion method. Here, records such as receipts or canceled checks are simply compared with the entries in the general ledger in a manner similar to personal accounting reconciliations. In double entry accounting, which is commonly used by companies, every financial transaction is posted in two accounts, the income statement and the balance sheet. One account will receive a debit and the other account will receive a credit. For example, when a business makes a sale, it debits either cash or accounts receivable on the balance sheet and credits sales revenue on the income statement. It's also possible to make a double entry journal entry that affects the balance sheet only. For example, if a business takes out a long-term loan for $10,000, the accountant would debit the cash account, an asset on the balance sheet, and credit the long-term debt account, a liability on the balance sheet. When a business receives an invoice, it credits the amount of the invoice to accounts payable on the balance sheet and debits an expense on the income statement for the same amount. When the company pays the bill, it debits accounts payable and credits the cash account. With every transaction in the general ledger, the left debit and right credit side of the journal entry should agree, reconciling to zero. Thanks.